This is the Kendall Report for Monday, March 9th, 2020. We have a lot to cover tonight. There is absolutely a collapse going on in the marketplace. Name this broadcast Black Monday. We're seeing a collapse across the board for multiple reasons. I'll try to unpack this as fast as I can. Russia and Saudi Arabia starting a price war in oil. Oil was down anywhere from 20 to 30%, depending on when you looked at it. It crushed the futures. Coronavirus hysteria just continues. See things in the United States like Austin, Texas, shutting down South by Southwest, which is the biggest event that ever happens in Austin every year. People depend on that. I used to live there, and it's just a huge event. $315 million worth of tax revenues alone that the city won't have. And what we're seeing across the planet is this coordinated effort to almost implement martial law wherever they can. Italy has now done it. They've got northern Italy completely blocked off right now, and they're doing the same tactic that we saw in China. And I still think that most of this, while there is an issue with the disease, I'm not a doctor, but it sure appears that this was a military op for the Chinese. We've seen that same process. Now we've seen the state of California declare an emergency because of a boat that's parked offshore. You've seen the state of New York over a handful of cases, and they're declaring emergency. You're going to see every sanctuary city, anybody that's against Trump is going to take whatever effort they can to shut down their city. I really believe there's a concerted effort to crash this economy. Let's talk about some of the elements that I think are going to be really important to understand and what the impact of what is happening is. I talked about on Friday's broadcast that psychology is changing. When you start to change what people do, how they act, where they migrate, it becomes serious. And this is happening on a very large scale. It's not about to end anytime soon. This is not a money issue. The Fed coming in, lowering rates, they could do QE, they can do anything they want, and it's not going to save this market from what's happening right now. Let's just talk about the Fed and what they did last week, and basically told everybody it's really bad. They didn't need to say anything, and everything that came out of his mouth just made it worse. Nobody has ever seen this type of volatility. I've been doing this since 1979. I was around in 1987. I keep seeing these stories about the worst drop, that this is the worst drop in 1 week we've seen. That's on Black Monday in 1987. The market was down 22% in 1 day. The panic is on, and especially the way the futures traded tonight. Show you some live futures charts. This is great timing because the futures they traded off the limit. Let me go to this full chart here so you can see exactly what's going on. This flat line here is limit down. They bounced off the limit, and the sellers just came right back at this thing and pushed it back down. And we're currently trading at the limit right now. Now, one of the things that has happened that is interesting is you see the time and sales here. There's 17,938 contracts traded at the limit, and there's currently offered 216 contracts. That number that we're looking at there represents $2.5 billion worth of stock traded in the futures equivalent. One of these contracts is worth 140,000 and change. So there's a monster amount of money being traded hands here, but you can see when it bounced, the sellers just come right back at it. Let's look at the economic and what's going to come out. On Friday, we had the release of unemployment. It was crazy good, 273,000 new jobs. Unemployment was little change at 3.5%. The average gains for the last 3 months has been 178,000. These are just amazing numbers, right? No one cared. Markets stayed under pressure. It was all about COVID-19. The markets are just under this monster liquidation mode. And the only market that's working in them is gold, and everything else, it doesn't matter what the asset is. Crude oil, Bitcoin, anything that's an asset that can be sold and raise money, they're selling this thing down big time. Let's take a look at the fundamentals and some of the reports that are coming out this week. Not that it matters. So there's nothing coming on Monday. On Tuesday, we get the Red Book. No one cares. CPI on Wednesday. Listen, folks, we're in a major deflationary period. You got crude oil, all the commodities, with the exception of gold, but all the commodities are deflating. And, once we come out as the other side, everything's going to be really cheap. But we got CPI and PPI coming out. I don't think they're going to matter what they are because everybody's going to wait for the March numbers because they're going to reflect what's going on right now. And as far as anything else goes, consumer sentiment, nothing matters here. I just wanted to point out how much the market sentiment, which is extremely negative, is going to play in on this market. Let's go back into the technicals. Over the past several days, I've been talking about this zigzag pattern that I was expecting to unfold. There was a caveat on the report that came out for Friday morning. I talked about a key number, which was 2910, and that number was taken out. The low on Friday was 2901. Now we bounced and we had some massive short covering. No one wanted to be short coming into the weekend. So the S&P and the Dow Jones and finished toward the high end of the range for the day, but still down. And there was also yet another gap on these charts. This is the pattern that I've been discussing that I thought would unfold, where we'd come in and basically do a zigzag, then we would go down into a new low. Those bets are off. This is the overnight, and you can see there is no zigzag. We took out the low that we made a week ago Friday. They could close the market tomorrow. All the circuit breakers could hit. Like I said in the beginning of the broadcast, I just hope you guys are out because you should be. And if you're not out, it's going to be a really, really difficult day. I think we could go down to around 2709 to 2650. There's some key support. Is S2 is 2834.50. We're below that number. The next number is 2766 and 2705. That matches to what I was talking about. The other number is 26. This is futures now. I'm going to go to the cash here in a second. But 2660 is the 200-week moving average. Now, this is where we bounced last time. I believe we're going to go through this number. So the cash market suggests that the number is 2855 as S2. That's a support 2. And that is significant. That is the low of a couple weeks ago. That number's taken out, which right now it will be. Then 2793, this is the cash market's 2737. Now, this is weekly projections on the downside. 2636 is that 200-week moving average on the cash. Let's look at the long-term charts because this is where it really starts to get scary. PPM1 actually turned up and PPM2 flattened out, and they're still in trend mode here. So there's going to be a battle, and the battle is going to be between 2740 level and the 2674 level. That is these last two dots on this scale here, which are also projected to take us down to the 40-month moving average, which is currently 2727. And there's a 0.71 rise on that. Now, this has been a number, if you watch this show for the last 4.5 years, almost 5 years now, you'll know that this number, that was the bottom in 16. That was the bottom going all the way back in 11. We saw it again come into play in 2018. And this thing is going to come into play again possibly sometime this month. That the way this market's trading, this could happen this week. I don't know where we're going to find traction. In these kind of markets, it's almost impossible to figure out where at least a price value level will be hit and the market will stabilize. The fact that it stabilizes does not mean it's a buy, because all of these markets on a large scale are starting to set up a major top. Let's dig into the VPM database, and it's amazing. We're still hanging in there pretty good. Mutual funds are 33.48, but as I mentioned last week, most of the funds that are long are bond funds. ETFs, same scenario. All the big ETFs, all the major trends have been broken on all the large cap, and You name the style box, they've been blown out. Equities are still maintaining around 40.5%, and that's pretty impressive from that standpoint. Down below here, if we look at the metrics, you're going to see we still see negative rotation coming in the sectors. They're still selling across the board in the sectors. Utilities did see some buying, which they should have, just because they're interest rate sensitive, and the 10-year overnight 0.5. You start to look at all the individual groups, still liquidation across the board. There's nothing good going here, and a lot of the sectors are literally under 40 percentile range or right around 40%. And most of the time in declines like this, the lowest that we're going to see in these percentages is between 28 and 32. Only time I've seen them below that was 2008 when we had a catastrophe and they literally got down to 9%. Looking at the VPM2O database, we're on a weekly basis, on a daily basis, we are down to 19.07. So there's only right now 3,210 symbols that are long. And once again, these are probably bond related or interest rate sensitive. There's also a bunch of healthcare stocks that have done pretty good that are a play on the coronavirus. But I want you to notice on the left-hand side here, all orange equal signs. That means there's no positions. 12 sectors, no positions. There's only 3 groups that are long right now. And if we look at the groups here, you'll see the only 3 are insurance, retail drugs, and retail home improvement. That's it. Those are only 3 sectors on a short-term basis that are long right now. On a weekly basis, still have capital goods and financials somehow are still hanging in there. But I think all these are going to be rolling out here after this week for sure. There'll be probably no sectors on an intermediate basis long as well. I just want to take a minute to show you exactly what's going on. This is the mutual fund area. So we got allocation funds, different funds here. Look at municipal bonds are pegged. Very heavy taxable bonds are also there. If we go down below and we look at the different sectors, you can see target dates are pretty much gone. But once we get into bear market, are pegged. And then we've got long short equity are doing okay. But here's the stuff that really gets into the muni bonds are just all pegged. So munis are a great place to be. And then we also get into the taxable bonds down here. And you can see they're pretty much pegged. Now everything is gone. And we look at the U.S. equity funds. There are some that are long, large blend and growth. We're down to about 30% of those, down to 9% on large value. So they're pretty lean as I was. Before we dig into some of the other technicals, I just want to take a quick look at the futures, and you'll see there's 1,511 contracts offered at 28.19, which is down the limit. You'll see the chart over on the right here. It's just a flat line. They've traded off a few times, but the sellers are just relentless when this thing comes off. I don't know when London opens in about 3 hours whether they'll be able to get it off or not. It is currently about midnight East Coast time that I'm doing a broadcast. Here's a quick look at the 10-year. You can see they just plummeted down to 0.70. And overnight, they're even 0.50 with what's going on out there. It looks like they want to go to zero. If this thing continues to go down and you've got deflationary pressures from crude oil and all the commodities with the exception of gold, and that's even starting to sell off. Everything's getting hammered that is an asset. There's just nowhere to hide. One of the things that makes me the craziest when people talk about, well, what should we be buying? Nothing, okay? Nothing. Be in cash. Let this thing run its course, and there's plenty of time to get in. It's not like everything's going to get better tomorrow. This is a multiple month scenario. And I want to go in on something. I know this is late in the show. I should have done this early on. But I want you to understand that from an equity viewpoint, it's going to be a very long time, maybe multiple years before you're going to be able to see any type of real returns for your clients. It's going to be, especially utilizing anything like you've been doing with ETFs and mutual funds, forget it. Not going to happen. You're going to have to definitely be able to get to some individual stocks, and you're not going to be any long-term trends on the upside that are going to be sustainable, that you're going to be able to participate from an ETF standpoint. Your customers and you are going to be very, very frustrated. But we could have, for the first time, a multi-year bear market like 2000 to 03. That's one of the longer ones. And you have to go back to the Great Depression to get something longer than that. But even then, there were 3 and 4 years, and then there were some up years, and then another group of 4 and 5 years going back to 37. We're going to see an elongated issue here, and I don't see any way out of this. They've broken these markets. They've changed the psychology in the marketplace. Back to the interest rates. The other thing you're going to start to hear talk about, and it may have some validity this time. I was a big time screaming last year that we're not going to have a recession. The inverted yield curve meant nothing. I just want to take a quick look at the monthly chart here so you can see how drastic this is. But this chart looks just like the crude oil. I'll show you in a minute. And you'll see how all of these yields have just plummeted here. The Fed is probably going to have to lower yields at least another 50 basis points. That's how crazy I think it's going to get. For them to normalize these yields, likely what's going to happen. I've seen an increase in probabilities for the Fed to lower rates in the Fed funds market. The US dollar, this is the monthly. We're down on the monthly support, but the dollar has been under pressure. It's likely to continue under pressure. It looks like the dollar yen is going to do very well against the dollar. And these are safe haven trades that haven't been around for a while. The dollar, as you can see here, for multiple years, from 2017 on, has been very strong. It was just 6 weeks ago, I was talking about the possibility of going over 100 on DXY. All the gold bugs were screaming a few hours ago. We were trading at 1,700. All of a sudden, we're back at 1,675, and there's still selling going on. This is an hourly graph, so each one of these bars is 1 hour. So 4 hours ago, we were printing above 1,700. Now we're about $25 lower right now. I don't know where it ends, but everything has turned very negative here. If we go over and take a look at the daily graph, you'll see we're starting to see a reversal spike. And I've been talking about this chart for a while, especially over the last few weeks, is that I don't believe this is the breakout point yet. I know everything, the backdrop that what we're looking at, but this looks to me a larger correctional phase here. So the pattern that's unfolding here, I'll just draw this decline here. This rally up is most likely part of a larger pattern here, which likely to stay in this pattern, seeing an acceleration on the upside. Now this short-term daily, and I've talked about on this rally, we started to see finally some acceleration, but it did not accelerate to the point that it needs to break out at this point. And in fact, you can see everything's turning down, even though that gold is up right now. So we're just not going to see the breakout. Certainly could happen, but it doesn't look like this is the pattern it breaks out from. The moving averages are kind of flat. We'll probably run back in. Still think we'll see the possibilities going back to 1640 and trading down into that support level. The monthly chart looks pretty darn good though, and not to contradict what I just said, but this monthly bar, what this would look like on the daily would be this sideways trading range where we trade this month into a sideways range, and then depending on where it closes at the end of March, then we could really start to move this higher. But the acceleration on the secular charts is still very, very strong. So even though I said we're still going to chop around in here, the acceleration on the long-term charts is huge, and this thing is not going down very much. 1640 is $25 from here is not a big deal. So if you have positions on, you certainly want to continue to maintain those positions. Crude oil chart to finish the show. And you see where we're trading 32.88. That is a lower low than what we made back in 2016. This is a brand new low. And this is on a monthly graph, and the momentum is huge. Minus 345, minus 316, and minus 80 on ppm 1, 2, and 3. This thing is not going up for a while. I made a joke in talking to an advisor on the phone the other day that I guess when you're going to pull up to the pump and they're just going to give you fuel, it's just going to be free. Talking about this price war taking this thing to $20. Going to see all the commodity prices under pressure. We're looking at deflationary pressures across the board, interest rates down, commodities down. In summary, what we're going to see this week is the most volatility that you've ever seen, even over last week. We're looking at a crazy situation. I think it's going to be a one-sided market as we go down to the numbers I talked about, going back to equities, looking at the 2730s as far as 2650 on the S&P 500. It's going to get ugly. And if we do get a bounce, that's awesome. The stabilized prices, that's fine. But there's no big rally coming back. The buy the dippers that came in on Friday are going to be really disappointed when they come in, because this is going to be an ugly market unless something drastically changes between now and the open. Thanks for watching. Make sure you subscribe, hit the bell so you'll know when I put these videos out there. Thanks again. I'm going to continue to do them every day. Be safe out there. I hope you folks are in cash. I'll talk to you tomorrow night.